Rafael. I'm so glad to see you. The reason we are in this talk is because we had a great panel at that CrossTech Fest. And what I liked about the panel, as I told you, is that pricing really, in all my years doing panels and doing conferences, I never really talked about this issue. I mean, it's a very niche issue, but it's an issue that it involves every company that is in the business in cross borders. I mean, any company anywhere in business, but we never really discussed that before in an event. So that's why it was interesting to me. So first, I want to start with you telling a little bit about yourself, like uh, where were you born, what you studied, and how you came into this industry that we are both so passionate about.
Well, Hugo, thank you so much for the invitation. This is an awesome project that you guys at CrossTech have. So excited to be here. So I'm Rafa. I'm Chief Economist and Head of Growth at Cheaper Cash. And I'm Mexican, born and raised in Mexico City, lived there for over 30 years. I'm an economist. I have a master's degree in economics and econometrics, where I discussed how competitiveness and how having competition in the economy can actually benefit the customer. And by doing that, you will find economic growth. And if you think about it, that's not very different from what I do at Cheaper Cash, or I did in my previous experiences in payments, right? When I came to the industry probably 10, 12 years ago at Western Union, and that was my first remittance company or remittance job that I did in the past in regard pricing, first time in financial services, first time trying to understand what was the money transfer and to understand how big it is. I just came and start studying about the industry. I was a little bit hesitant about joining Western Union because it was like an industry that was very old school, not a lot of tech, cash based. And I remember, this is a real story. I was in the kitchen with my father and I told my father, I'm not sure if I should join this industry because it's very old school. I don't know if I'm going to like the people working in that company. I don't know if that's a path that I want to be in consulting or investment finance or something more glamorous. But I went into the office of Western Union and I sat down with HR. I signed a contract and I stayed there for over 3 years, almost 4 years, doing pricing for US to Latam and Mexico and Bolivia, Chile, and then all around the world, and trying to understand how FX rate volatility impacts a customer in Ghana or in Mexico or in Philippines, and trying to understand all the different aspects. So that's the reason I came into remittances. Then I jumped to other places. I did some fintech, credit related. I did all other type of commodities, and now at Cheaper Cash we do cross border, and we have a complete ecosystem in the continent, where we don't only offer the cross-border money transfers, we offer merchant services, trading services, as well as many other possibilities that you can now have with stable coins and with efficient liquidity systems that we have. So that's the way I entered into this industry, which it happens that I love and I like, and I want to be here for many more years because I'm excited about the future of this place, right? Which is a very nice.
And as we were talking, pricing in this industry has changed so much, and in not so many years. Because let's say the first 20 years, it was basically very standard. There was a negotiation, there was a foreign exchange that you tried to match, but you didn't have too much room. There were not too many opportunities, and the margins were larger. So you had a lot of wiggle room. Also, the volatility, because you had good margins, you could sway up And that's something that has changed. I've seen it change so much in the industry. But there's still a lot of companies in the industry which are in many different phases of this development. I mean, the old school companies which are surviving, and digital first that were the first to enter change things, but that there's now a new wave of fintechs that are really pushing hard on those digital first. So tell me a little bit about how do you've seen that change from your side, from pricing and in the industry, especially in this last few years.
The main thing that changed in the past 10, 12 years was the buy rate. Companies going into the market every day in the morning, purchasing fiat, and then trying to sell that fiat at a margin. And then the margin need to cover the sending side agent, the receiving side agent, the different fees, rents, cash management, massive amount of items in the supply chain that nowadays they are tending to disappear. I don't think they will disappear forever, but the direction is that they will disappear. Um, I will say that the other half of the pricing, which is uncertainty, it's something that is not disappearing and it won't disappear, probably never. You will always have FX volatility. You will always have governments that control the monetary policy, the fiscal policy of the receiving side. You will always have fees and taxes that you need to pay. That's something that will happen forever. So pricing for uncertainty, that's something that is not going to change in the near future. I know, for example, that places like Francophone Africa, these countries that group together and they have a currency that is pinned to the euro, now they have less volatility, but that doesn't mean that transactions will be free. And that doesn't mean that prices will be negative or zero, right? However, pricing has changed a lot. And now with real-time settlement rates, where you can see the real rate that you will receive at that moment of the transaction, and you can track the rate, and you can see how volatility fluctuates and how your price is fluctuating. Now it's easier for the customer to make a better decision. And on top of that, we don't only have a sending side, receiving side customers, we also have ecosystems in the receiving side and also ecosystems in the sending side. So the cross-border payments or the remittances services, it's more a feature rather than the product. If you see how companies operate in the receiving side, they have embedded financial services where you can trade, you can pay your water bill, you can pay some airtime, you can do many different things in the receiving side as well as in the sending side. And one of the features is sending money. And that impacts the pricing because the GDP of the ecosystem is growing, not because people are moving more money, which they are, but because money is moving freely and more flexibly inside the ecosystems. And that's why pricing is coming down, although monetization in all these companies is increasing because they have larger TPBs, but at lower margins, which means that customer wins, companies wins, everybody wins, and then they produce innovation. And that's probably the best formula. I'm super excited to be part of this transformation because the industry transformed massively in the past decade. It's a completely different industry. It's a completely different playground, which we knew 10 years ago to what we have now. And it's completely different.
And it's interesting because when you said that the payment of a remittance, let's say it's it's an ecosystem. One of the things that we've been discussing is that banks in the paying side, especially in Latin America, they really enter the money transfer business to get hard currency. They wanted dollars, and they wanted dollars. Like remittances departments will give the international side of the bank the funds so they could sell that to exporters, investors, etc., in two disconnected worlds, you know. And then they just were very happy just to have to acquire that those funds. It was not even acquiring a customer; it was acquiring the funds. So the bank didn't have to go to the market and get foreign exchange at a higher price, and they were happy with it. And we know that that cannot happen any longer. And every bank knows that just admitting that money is in the account and that's it, it's gone because you have to work with the customer and create that ecosystem. So it becomes what you said. I mean, it becomes a whole ecosystem of pricing, offers, making money here, making money there. And bank and fintechs that are able to do that more efficiently are the ones that are going to be able to compete because the others will see their margins go down, down until they cannot continue. You know? So, yeah, tell me.
That raises a very important piece of this conversation, which is partnerships. More MTOs, more potential clients or potential users trying to send money from country A to country B opens the door to having or building more partnerships with different companies. So instead of having a bank in the US that speaks to a bank in Europe, so you then can disperse your funds into Ghana or into Nigeria or South Africa, now you connect Latin America into Africa with two private MTOs or private parties, and without the need of having a banking system, a traditional banking system. And that not only connects to customers that need each one's fiat currency, but also connects two different ways of moving money and connects not only from the compliance, know your customer side, but also on the pricing side, because then you don't need to pay for those extra margins that you were paying to the bank. Now, this doesn't mean that the bank will disappear, but it means that you have the possibility to net your liquidity. If you want to change Peruvian soles to Ghanaian cedis, you can actually net by finding a person or an entity in Ghana that wants to send money to Brazil or to Argentina. And then it's much, much easier to move money between these two regions with more liquidity, flexibility, as well as better unit economics overall. That makes sense. You offer more money to the customer, you retain a larger margin, you invest that margin into innovation, into opening new markets, and then you build a cycle. And the one that doesn't want to participate into building this new cycle and this new way of moving money, it will stay behind and it won't be part of this conversation. So that's why also the big money transfer operators, they're starting to work with fintechs and with these companies that are growing very fast in building new opportunities and new ways to move money from different places to other places, as well as the ecosystem that we spoke before.
And what I like about that very much is that the industry has grown, and not because there's that many MTOs now, because there's been a lot of mergers and acquisitions, etc., but because there's so many participants in the chain of payments. How do you think pricing affects that retention of that customer? Tell me a little bit about that.
When you have different monetization systems that are not always linked to the money transfer per se, to the remittances per se, you need to retain that client. And this is because margins are starting to decrease, not in the bad way. They're starting to decrease, but their ecosystems are growing. So the overall profitability of these MTOs is growing. However, the monetization per unit is going down. So retention becomes the most important item in the customer lifetime journey. And this happens because the most important transaction is not the first transaction, it's a transaction that brings a customer back. And this is because you can buy customers. You can go and buy ads, and you can invest in marketing, and you can go and try to bring more customers. And you can actually do a lot of customer acquisition and be very successful at it. But you cannot buy customer relationship. Customer relationship and customer retention is a function of value. And value in this industry is this. I have $1 inside your ecosystem, and that having that dollar is worth more than having $1 outside your ecosystem. So if the dollar that I have inside your ecosystem is worth more than the same dollar outside, then I will be part of your ecosystem, and I will be part of your MTO, and I will be continually trading in your system. And that's the definition of retention. And that's the definition of customer lifetime value. So now the conversation shifts from moving more volume of transactions, more value of transactions, to retaining more funds and having higher balances inside your ecosystem. And that's where now the monetization lives, which is completely fine. And that's completely nice to have, because now you are solving the customer's problem. And that's where the future of this industry is. Right now, we are in a transition period. We have companies like Western Union, MoneyGram, RIA that are massive in what they do. They're huge in what they do, but they're starting to build these ecosystems, or starting to partner with other companies that have these ecosystems, so they can also benefit from retention and monetization of that retention. And that's where I believe that real value right now is, and where every MTO should be focusing on and targeting their efforts in the next probably 5 to 10 years. Especially now with stablecoins, that's so easy now.
And it's interesting also to think about how fintechs go through this process. When they're growing, spending lots of money in marketing, and they are just volume, number of clients. But tell me a little bit about how do you see fintechs in that process of assigning resources to one thing or another, and how pricing plays a role in that?
Building systems that monetize and that continue to retain the clients more and more, those systems are based on customer behavior. If you want to build a product, you need to understand if the product has a decent market fit, right? If the customer is going to use that product and it's going to get value from that product. If you build a product that it's not needed in a market, then you are going to spend money. You might acquire as many customers as you want. You can go and pay millions of dollars in ads, go to social media, go to different platforms, spend money on marketing and bring a lot of downloads, and then convert the users to being verified and being compliant with the local regulation. But then what? They're not going to make a transaction, or you can pay them to make transactions, but it won't be profitable. So before trying to acquire customers, we need to understand what's the product that we're offering to the customers. And if the product that we're offering to the customers makes sense and solves the problem that the customer has, then retention will come by itself. And then if the product that you're offering makes sense and it's competitive in the market that probably is already offering that problem, then you will have a system. And then if you have a system that is working, that has healthy monetization, and you are making a margin of it, then if you are making a margin of it, you can innovate and you can offer the customers better products, right? It's not about just growing the customer base and growing the number of customers, because that's something that looks very pretty. It's about how many of these customers keep trading with me because I'm solving a problem that they need, or I'm saving a step in what they use their money for. For example, if you are in the US and you want to send money to Colombia, and then you will use that money to pay your water bill, then you have to make 2 or 3 different steps. You have to go to a store in the sending side, you need to go and cash out that money in the receiving side, and then you need to go to the water office and pay for the bill. With a different system, you can, from your cell phone, you can pay your water bill using this system in Colombia, in dollars to Colombian pesos at a decent market rate where everyone makes money and you save time, which is ultimately what the customer wants. How seamless these transactions and this process are, instead of having to do many different steps that involve more fees, more risk, more volatility, and an enormous amount of different steps.
Tell me something that is interesting before we finish is that I see a lot of new fintech companies, also crypto companies that are coming into the industry with a lot of forex solutions, liquidity, instant payment, instant trade. I mean, that is changing quite a lot. That settlement side of this industry, I see a big change happening. Tell me, how do you see it from your point of view and from the pricing perspective point of view?
So, instant settlement use of stablecoins gives the ability to price much better because you're pricing to a market rate at the moment of transaction, and you don't need to have a big liquidity management system that discounts the fact that you will be receiving the money in T+2 or 3, or if it's a weekend and a holiday, probably next week, right? So volatility is not killed at the moment of the transaction, but it's very diminished. It's very reduced to a point where you have a better understanding of where's the market at that moment of the time, and then you can make a decision whether you offer this price or that price, which is normally lower. And then if you have an ecosystem in the receiving side where you're collecting fiat and you're selling dollars, then you have the ability to net, which means that you receive fiat and you receive dollars in both sides of the equation. So basically, the settlement rate disappears and you offer a rate that is closer to mid market rate, which means that then both sides of the price will go down and you'll be able to scale from there. And then you can also use your pricing to manage this netting. If you have a high demand for the fiat, then you increase the price of the other side, or vice versa, where you need to manage your liquidity.
As you said, also finding those partners who have help you with that ability to net. Netting was very difficult before, first because regulators hated it. They had a hard time understanding how you were netting. But the foreign exchange industry always worked on netting. Now, of course, with technology, that can be done faster, more secure, etc., etc. To finish, tell me a little bit about how do you see the role that pricing plays now. Give me a sense of any other aspect that we have missed in our talk.
So there are a lot of different aspects. It's impossible to cover all the cross-border money transfer industry in a 30 minutes conversation. But what I will say is that what is exciting about this is that more and more and more organizations, companies, governments, different institutions are aligning, and they're speaking the same language, and they understand the use of stable coins, the use of real-time liquidity systems. They understand how companies are making margins nowadays, and that is very, very, very positive for the industry, because that will generate innovation. The most important thing will happen, which is putting more money on the customer's pocket, which is what everybody wants. No one wants to put less money on the customer's pocket. Everybody wants to put more money where the customer can use it to do what they want to do with it. So this fact that everyone is speaking about the same thing at the same time, they more or less understand and want the same, and this alignment, it's something that it's very encouraging and very rich, because this is setting the direction for this industry for the next 5, 10, or even 25 years. And then if on top of that we continue building partnerships and we continue improving the way governments provide licenses and the way we get into different corridors and the way we innovate our products and we offer better solutions to our customers, this industry is going up and this industry is improving, and that will improve the quality of life of the people that are living in countries where the majority of the remittances are received. And just for example, an average in Central America, 25% of the GDP comes from remittances. If you take away Costa Rica, in Africa, it's around 10%. So it's a massive amount of number, and it's a massive stake. What is in this industry? It's incredibly big. So being part of this, it's very, very awesome.
Thank you very much. That was great. So thank you, Rafael. Good luck with you and with Cheaper Cash. And I hope to see you very soon.